Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from Stallion Uranium CEO Drew Zimmerman. Now, during today's webinar, he will provide an overview and outlook. Then we will take your questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During the Stallion Uranium webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on the company's page 2 of its corporate presentation. That can be found on its website, stallionuranium.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Stallion Uranium. Now, with that said, why don't I turn the floor over to Drew to speak about Stallion?
Well, thank you very much, Dave, and appreciate the opportunity to be on here with you and to be able to share with our viewers. I'll kick things off here. Stallion Uranium, we are a focused exploration company in the Athabasca Basin. As you mentioned, our fine print will be making some forward-looking statements throughout the presentation. But what it really comes down to right now, and I mean, very, very topical, we're seeing in headlines, every day, and big headlines, it seems every week, is a uranium market that is structurally undersupplied. We continue to see more and more and growing demand. Data centers have become a very, very popular topic. And, even just the big ongoing, traditional large nuclear reactors don't have enough supply with new reactors that are getting built, reactors that are getting turned back on. And that's why we think it's important for exploration companies to be operating right now. We have some big developments in Canada that are moving forward. We've got Denison and NextGen and fission uranium, but we really need that next pipeline of big discoveries that will continue to keep the nuclear industry healthy in the decades ahead. And, this slide works a little bit better and we can add some animations to it, but that's the urgency that I think is important to realize when we talk about uranium right now. And, it's got sort of two pieces to it. One is the supply side is becoming incredibly bifurcated. Most of or almost half of global supply coming out of Kazakhstan that won't be coming to Western markets. It's going to Russia, it's going to China, and it's not coming to the Western market supply. And that's a very important piece when you're looking at that size of supply in a market. And then the other side is the demand side. We continue to see more and more demand coming, and this CDU CSU piece is and it just got announced a new snap election coming to Germany in March of next year. They have 8 reactors that could get turned back on very, very quickly. That's a significant amount of near-term uranium demand that is not in the price forecasts or the supply demand forecasts right now. And then, of course, as I touched on, just incredible amount of tech really putting money where their mouth is and investing in, SMR development, investing in power deals like Amazon or Microsoft with the 3 Mile Island power deal to, restart existing reactors. And then I think most importantly, you're also seeing the fact that big banks, 14 of the biggest global institutions, willing to start to finance these projects. So it's one thing to sort of talk about them, and now you've got big tech financing them and the biggest banks in the world looking to back them as well. So, with all of this happening, it's one thing to talk about supply and demand, but we really have to be putting boots on the ground to be able to start to find that next level of supply that, again, it takes time to work through the pipeline of development and then eventually into production. And I think, we're already too late. I mean, you listen to Lee Courier at NextGen say, we don't need one Rook 1 coming online. We need 5 of them. And I very much agree with that. And the thing is, we need to find those next Rook ones, and that's what Stallion's whole vision is all about. Speaking of vision, our largest shareholders have had a lot of success in the Athabasca Basin, and have that vision and allow Stallion to have that vision of creating value with those next big discoveries. And this is a group that founded Hathor Exploration and later sold it after they found the Rough Rider deposit to Rio Tinto for $650 million. Stephen Stanley on our board of advisors. They also vended in the initial assets into NextGen and Atha Energy, significant shareholders there still. Again, just proving that there can be a lot of value created in the Athabasca Basin when you have the right vision and the path forward, like Stallion does. So our vision when we stepped into the basin was to say, the eastern side has seen a lot of exploration ever since, the early 70s when Key Lake and the Rabbit Lake complex were discovered. And, the southwest side was just, really not seeing that same level of exploration. And it wasn't until, 2012 and 2014, you had the Triple R and Arrow discoveries. But that was, right when uranium prices had started to roll over. So there was no, exploration boom that came to the southwest corner of the basin to follow up those world-class discoveries. And that's how, Stallion stepped in. We were able to build out a significant land package in the southwest, knowing that it was vastly underexplored, but in our mind, just as well endowed in uranium as the eastern side of the Athabasca Basin was. And part of that thesis was we are going to see both NextGen and Fission move towards development that brings a lot of infrastructure to the region. So that's the reason why after those early discoveries in the east for the last 50 years, there's been a lot more discoveries and a lot more mines and mills built there because of all the infrastructure that followed those early big discoveries. And we think that's what's going to be happening in the Southwest Basin and why we established our land position there. So just a quick infographic of what we think is possible. Again, sort of those earlier shallow near the edge of the basin discoveries that were made in the east. And then later on, you had, 5 big deposits making up over 1 billion pounds of uranium sort of be found in the decades after, in the 80s and the 90s. And now when we look at the southwest side, again, some of those earlier big deposits being found right near surface, and Stallion's now built out its land package in that underexplored area of that 300 to 1,000 meter depth in the Athabasca Basin, but looking for those next, significant deposits that can be, hundreds of millions of pounds that really move the needle on a global level. So that is our vision for building out such a big land package in the southwest side. And lucky for us, the technology's gotten a lot better since they found Cigar or MacArthur, and we're able to utilize the latest surveys and take such a large land package and really explore it very effectively and very efficiently. So we have what we call our exploration funnel, and that's taking 3,000 square kilometers and running it through a series of surveys that eventually leads us towards drill targets, and we think ultimately our uranium discoveries. So we've been running our entire land package through regional surveys already, and that's allowed us to highlight our 9 tier 1 target areas. And again, these are what we're calling tier 1 because if they were on the eastern side of the basin, they would have 50 or 60 or 100 drill holes in them. And we just put the first 3 drill holes in our Appaloosa target earlier this year. So, we have our most advanced Appaloosa target that we've brought all the way to drill testing, sort of that bottom level of our funnel. And we're also doing the work to bring other targets through this funnel, right, to be ready to be drill tested as well. And we'll go through some of those key targets that we're looking at and why we're so excited about the work that we've done and the work that we have coming up. So our Appaloosa target is right at the north end of our 100% copper project. As you can see here, our trail built off the highway and our 3 drill collars there. The other key piece to highlight when you're looking at this graph here is that we've got the UEC Orano Shea Creek deposit only 13 kilometers to the west of where we're drilling right now. So, in terms of closeology in the Athabasca Basin, an incredibly close deposit that's 100 million pounds in the ground. And that's important for us because when we launched our maiden drill program, we were looking at the analog of the data that we were seeing from those first 3 holes and what it compared to at Shea Creek. And we were seeing a lot of the alteration in the sandstone and a lot of the alteration in the and on each side of the graphitic conductor, as you're seeing here in this image. Really looked, not similar to what they had at Shea Creek, but exactly like what they have at Shea Creek. So a very positive sign for us for only having 3 holes to actually have, the data from 500 other holes very close by to be able to really help us and guide us towards what we think can be that discovery. So while all 3 holes were anomalous in radioactivity, the 3rd hole was our big win and really gave us a lot of information in this area. So that's where we hit our graphitic conductor under the unconformity. And, in very basic language, this is, the piping that runs underneath these big unconformity style uranium deposits in the Athabasca Basin. So this drill hole gave us, 3 very important pieces of information. One, we now know exactly where this structure is. We're not targeting geophysical anomalies anymore that, are always open to a little interpretation. 2, we know that it's a big structure. It was 95 meters wide. So in comparison, that's actually just slightly larger than the structure underneath Shea Creek at this depth. So again, we know the plumbing is big enough to host a large deposit of, again, in Shea Creek's example, 100 million pounds or more. And to the 3rd point is to know exactly where we want to target. And that's following this conductor up dip towards the unconformity. And what we've done here is we've actually modeled to size the Shea Creek deposit to show what it would look like on this cross section. And again, you can see that these are, big high grade deposits, but they're actually not that large in size. So again, something that we're looking for that could be, incredibly valuable, fits very nicely on the graphitic conductor that we have in this hole. So for us, a lot of excitement with everything that we learned over that drill program, and now being able to try and get back out there to have a follow-up drill program to be able to make what we think is high probability of a discovery hole. And again, we know these are difficult discoveries to make, but with the technological advancements and all the data that we have and being able to analog to Shea Creek right next door really increases our confidence, and we think our probability of being able to do that. So a very exciting time for us to get back to the Appaloosa target. And again, I'll just go through a couple, not all other 9 or 8 targets additional to Appaloosa. So Fishhook is another key target that we really like. There's a few key things that stand out for us here. One, it's a very complex area. It's a conductor that bifurcates, it splits into 2, a lot of alteration in that area. So we're currently running a HeliSAM survey over top of this target to, again, continue to upgrade it, move it through our funnel towards getting ready to be drill tested. And the other key piece for us was just 8 kilometers south of this target on the same corridor was a uranium occurrence. So again, knowing that there was uranium bearing fluids running through this corridor is always a big leg up in upgrading a target to know that it has the potential to have significant uranium mineralization. Another target very close by, sort of call it 2A and 2B here, is our Coyote target. This one goes partially between our 100% owned Gunter Lake project, and the other side is on our AFLA joint venture target area. But again, same sort of thing. This conductor sort of bends around and creating a lot of features that are there to allow uranium to precipitate out and sort of form a deposit, gravity and magnetic lows along there as well. So we're looking at the potential of again, another survey, on the ground survey this time, that would be the final survey prior to drill testing. But again, a lot of features in this target that we really like as well, and why one of our next targets to follow up on. So this is just a broader slide we use to really highlight the potential in the Athabasca Basin and the value that can come to shareholders. And obviously near the top of this chart is a neighbor of our land package, NextGen Energy. It was 2014 that they made their discovery of the Arrow deposit, and have since turned themselves from a junior exploration company to a $5 billion or plus now development company. More recently, of course, another neighboring company of ours, F3 Uranium, right along our copper project, discovery hole that sent them from a 20 million market cap to well over 100 million market cap as well. So again, the area that we're in, is proven. The targets that we're looking at are proven through decades of exploration. We're not recreating that wheel. We're just following it with the latest technology and modeling that's available, and getting out there and doing that work. So a very exciting time for Stallion to have worked such a big land package through that funnel, and now getting towards a follow-up drill program and getting a couple of our other targets towards drill readiness that we think provide a very exciting future for Stallion at a time when uranium supply is in question, and in question in a way that is deposits that can move the needle on a global level. And that's what Stallion has been looking for. That's why our land package is in the basin. It does take a little bit more work and time and effort to be able to find those target areas and then ultimately drill test them. But it's because we think that payoff can be so big. We are looking for those next world-class deposits, and we think they're there. And it's the part of the basin that just has seen the least amount of exploration, and again, a very exciting piece for us. The other piece of Stallion's story, not in the Athabasca Basin, was our original project in Idaho. We're under an LOI right now and looking to be announcing shortly the definitive of divesting of the Horse Heaven asset that will see cash or monetization come to Stallion, so not dilutive for our shareholders now, and importantly keep a ownership interest going forward that we think has a lot of potential, with a lot of good catalysts happening with Perpetua right next door. They got their draft record decision to go ahead and build that new mine and mill. It's going to be a gold as well as antimony, a critical mineral in the U.S. with no U.S. supply. So again, a lot of interest in that project. They've had DoD funding. They've had the U.S. Import-Export Bank offer them financing for the project. So again, a district play that's going to see a lot of value come because of the catalyst happening next door. And Stallion will continue to benefit from those with this new deal that we have, while we allow ourselves to fully focus on our uranium assets in the Athabasca Basin. So some of our key team members, Darren Slagowski, we brought him on as our VPX. He's known the southwest side of the Athabasca Basin incredibly well. He was drilling with PurePoint for over 7 years, so knows the geology, knows what you're going to be seeing in those drill holes when you're getting a high-grade discovery, and more importantly, what you're seeing around them. Matt Schwab, we brought on as a technical advisor and director earlier this year. He was, one of the fourth or fifth employees at NextGen Energy, instrumental in them finding the Arrow deposit. Again, somebody who's very familiar with uranium exploration, but uranium exploration in the southwest Athabasca Basin, where we're focused. As I mentioned off the top, Stephen Stanley on our board of advisors. And then we brought on Knox Henderson a few months ago to help us tell our story. And Knox has been in the industry for a couple of decades, and had a very big win right from start to finish with Great Bear as they sold their asset off to Kinross. So again, a team that has executed very well over the past couple of decades. And in the interest of keeping it short and sweet and being able to get to some questions, we'll take those questions now.
Great. Thank you very much, Drew. So we'll now kick off the Q&A portion of the webinar. Reminder to everybody online, you can type your questions into the chat box. We do have a couple of them already here. Drew, you are a CEO of a junior exploration company here, long lead time to production, and really investors are buying your stock for its discovery potential. But how much even today do you speak to potential investors about uranium prices and fluctuations in the market and these things like AI, things that are influencing even the junior explorers right now?
Yeah, I talk to that quite a bit because I do think it's incredibly important. I think it creates the market for us, the reason why we need to find those. And, as I sort of touched on a little bit in my presentation, it creates the urgency. So, we saw that at the beginning of this year when we had uranium prices run up over $100 a pound. And there was a lot of urgency, a lot of excitement in the uranium space. Obviously, the producers start, making, incredibly good cash flow. And even as we pulled back here to $80 or the $80 range and stayed pretty steady, this is still a price where these discoveries and even the development and the producers are very economic. But again, we're still seeing, the need for more. And I think, when you need more supply, you just tend to see higher prices because that incentivizes more supply to be found. And I think that is the important piece, is when you're seeing incentive prices go higher. So, uranium prices move higher, then it just becomes, that much more important for some of that money to go to the junior explorer codes to build out that pipeline of supply. And I think that's the important way to look at it, is a pipeline of supply. And if there isn't the junior explorer codes, the front end of that pipeline just starts to run dry. And then you really get yourself in a pickle of, not having the supply needed in a timely manner. Because again, as we've seen, it does take time for discoveries to go through development and eventually into production.
Absolutely. I think if we look back about a year ago, I think we were passing the $70-$80 mark. And, had somebody asked me if that is an incentive price, I would have said yes. So good. Okay.
Yeah. Sorry, go ahead.
No, go ahead.
I was just going to say, and that incentive price continues to change. And I think what has changed that in the last 6 months even is the size of the demand growth. And as that changes, then you just need that much more supply, which I think changes that incentive price even higher than where it was before.
Mm-hmm. Absolutely. What sort of to follow up on a question here, somebody looking for the size of the company over the last couple of years. The company's not that old, first of all, but what was the market cap when we saw that big run towards year end, maybe earlier this year?
Yeah, I mean, earlier this year we were able to finance at 22 cents. So at that time we were roughly a 30 million market cap. And with the market pullback and some of the urgency or enthusiasm coming out of the junior end of the market, we've definitely felt that. And the thing that I like to talk about is outside of just share price. And trust me, I do know where the share price is, and it doesn't feel good. But it's the fact that, we've done an incredible amount of good work in that last year alone. And if I look at, our opportunities and what we have in front of us, we look better than we ever have. And it's, part of our story of having, gone from so big to where we are now, and an advanced project that has discovery potential, as well as the other pipeline of top tier targets that we're bringing along. Our team is incredibly excited, incredibly motivated. And again, it's building that story that, we think is getting better and better. And we think it will start to resonate with the market, whether that's, on a sniff or a discovery, or again, even just uranium prices, starting to do what they did at the beginning of this year, and have investors look at the work that we've done and the potential that we have, and the very near-term potential that we have. I think is where that excitement is. And again, what keeps our team working as hard as we are to continue to move our projects forward.
Mm-hmm. Absolutely. Your investors, are they largely retail? Do you have any institutional following?
Yeah, we are a largely retail name over the years, but again, as we've worked to get to more an advanced stage on our projects, especially with our maiden drill program underway, our last financing was largely institutional over the summer. So getting in some of the big institutional accounts into Stallion, and that's going to be part of our mandate and push as we continue to drive forward. Is getting in those larger accounts that really share that same vision as sort of our big block of key shareholders. And again, that allows us to continue to do more work as we go forward. So exciting to start to transition into the institutional accounts and definitely continuing to build that.
Mm-hmm. Yeah, a lot of smart money in the uranium space still. So now, why did you decide to focus on the southwest corner of the Athabasca Basin?
Yeah, for us, as we were looking at coming into the uranium space, over 2 years ago now, and this was sub $40 uranium when we first decided to pivot from gold into the uranium space. It was looking at the basin and just seeing, obviously the thousands. I think there's roughly 14,000 drill holes in the eastern side of the Athabasca Basin. And then you had sort of two world-class deposits in Fission and Next Gen in the southwest side. And, I think there's 25 or 2,600 holes throughout the entire bottom quadrant of the southwest side. And again, really digging in to, why that was and what was going on, and if it was, a big geology mismatch. And our belief that it wasn't. It was just a ease of exploration and being able to have all the infrastructure that was there in the east, and that would be coming to the southwest side. So it was being able to say, we can get in early, we can build a big land package that gives ourselves the best potential to have a lot of shots on net for discovery potential. And again, do that sort of economically and under the radar a little bit before the Southwest really started to pick up. And then, as we were doing our due diligence, F3 made their discovery hole, which was, I think, again, very important for the Southwest side of the basin, because it was proving that, these deposits are not just along the Patterson Lake corridor, where you obviously have, Triple R Arrow and then Spitfire, but outside, and sort of proving the model that, the Southwest is just as well endowed. It just hasn't been explored for, not even explored for efficiently or effectively, just explored for, period. And we're really loving the fact that we get to be sort of the trailblazers of doing a lot of that work, and most of the ground that we cover is first time work that we're doing.
Yeah, not just off the Patterson Lake corridor, but even west of that Clearwater domain. So I'd say it really shows there's a lot that we still need to know about the basin. So good. Now, you guys have a rather large land package. How long is your prioritization of these projects? And really, are there any decisions to be made whether you as Stallion would go ahead and test them, these projects, or is there any effort to try to see if others are interested in throwing money at certain projects?
Yeah, a great question. Again, we do have a very large land package, and again, part of our strategy will be to high grade. Have started really big, and we're not in the business of spending money for the sake of spending money. So if there's ground that doesn't look prospective, that will be ground that we can drop and no longer need to maintain. And that is some added optionality. It's definitely not our business model to be a project generator by any way, shape, or form. We do want to continue to advance our very best targets, and are doing so. But when there is a lot of urgency in the space, like we saw at the beginning of this year, we were getting inbound calls on the land package that we had, and again, we've progressed it even more since then. And I do think that as we go forward, and if we see uranium prices continue to run higher like we expect them to, that that will be some decision optionality that we have down the road. And, we did take advantage of that earlier this year. We sold our East Basin assets. We had 3 separate projects there that we were able to sell off and get $400,000 in cash, as well as 10% of the issued and outstanding of a new company that was coming into the basin. So, that is something that we'll continue to judge and look at, while at the same time working to bring our best targets forward ourselves.
Mm-hmm. Yeah, and some of these potential targets relatively deep. Is there a geophysical method that really helps you out at those depths, or do they really help you just get the structure and then your drilling takes it from there?
Yeah, a very good question. So our Appaloosa, we're roughly 700 meters to the unconformity. So for us, regionally, we found a mobile MT survey, obviously getting the initial indications of the area. And then a stepwise moving loop has been the ground survey that we think has been most beneficial, giving us the highest resolution. But to your point, we are targeting the graphitic structure, right? So we are targeting that structure and then features around that structure. But again, that's where even the first 3 drill holes that we had, and especially the third hitting that structure, just give us, a whole nother world of information compared to what we have from geophysical analysis from the surface. And again, not to sound like a broken record, but having 500 drill holes from 13 kilometers west of where we're drilling to be able to compare what we're seeing to is a huge amount of data that we're able to utilize to help target where we're going next and really best understand where we think the structure is going, where there's the special features of the structure that tend to be the areas that can have a uranium deposit is key for us. And that's what I will say too, our next targets at Fishhook and at Coyote are 350 and 400 meters deep. So we are looking at all different target depths, and for us it was about being pragmatic and following the data to say, if we think there's another West MacArthur on the southwest side, we don't get to choose where it is and what depth is at, and we're willing to follow that data, and whichever data is looking the best is where we'll go.
Mm-hmm. So now that you've hit the structure at Appaloosa, what are your plans for next year? Is this going to be winter drilling? And, are you going to follow up on that hole where you hit the structure and step out a little bit? Or do you try new targets that on the property that you haven't hit yet?
Yeah, we're continuing to do the work, as I mentioned now, on Fishhook, bringing that target towards drill readiness, and same with Coyote. So that is a priority in 2025 to have another 1, if not 2 of those targets drill ready. But for us, the big catalyst is definitely being able to have a follow-up drill program at Appaloosa. And our next key target, as we have in that cross section, is just up dip of where that conductive structure hits the unconformity. And we think that's where the potential to have a Shea Creek size and scale of deposit is. And it is along that corridor that we think is there. And Corey at Canalaska has done a great job of seeing there's sort of pearls along a necklace is how these deposits can be formed. And we now know where that sort of necklace is running, so to speak. So by following that structure up dip, we're looking for that pearl section. But again, we think that at the unconformity, we'll get a lot of information from drill hole 1. If it's not the discovery that we hope it is, that informs the sort of step out back towards some of the original drill holes along that structure. But again, for us, that's going to be a very exciting time for the company, and again, something that we continue to do a lot of work on. And to this time right now, we're reanalyzing again all our geophysical data and all the drill data and the data that we're seeing from the drill holes at Shea Creek. So it's exciting, and again, as I touched on the valuation side, these deposits are just so valuable. It's amazing that a company with such a small market cap can find a multi-billion-dollar deposit with a drill hole. Now, we don't know it's that big with one drill hole, but again, that it can lead to something that big is why it's so exciting to be in the uranium space right now.
Yeah, no, interesting. You mentioned Shea Creek and Can, Alaska, who have the West MacArthur project. And my next question was going to ask what sort of targeting, what sort of deposits are you targeting? You know, are you searching for basement hosted or unconformity? Because Shea Creek and West MacArthur are two of the projects out there that have basement plus unconformity, even perched up on the sandstone, which is a little more unusual. So what are you targeting here?
Yeah, our base model is targeting the unconformity. If that is an unconformity that does go down into the basement as well, that's something that we're not going to not follow up on. But for us, having Shea Creek, which as you mentioned does have some perched uranium as well, that's not going to be something that we're going to be targeting when we only have a few drill holes. You want to be making sure that you're intersecting your structure and intersecting your structure at the unconformity. And again, when we're looking at the grades that we're seeing, both at Shea Creek and Can, Alaska's new grades, I mean, we're just astounded by how high the grades can be at the unconformity style deposits. So for us, that's definitely the main target will be a large unconformity style project. And then again, if we kind of start getting onto that and we find that it's got some perched components or some basement components, that would be, gravy, so to speak, but definitely targeting a unconformity style deposit when we're looking at the modeling and targeting that we're doing.
Right. Okay. A couple more questions here. Horse Heaven, you're divesting of that project, but you will have some exposure to that project once the deal is closed. So I guess what's your exposure there, and how far are you carried?
Yeah. Again, we're working to have that definitive closed this week. So that's a news release that will come out. And for us, it was key to be able to monetize. So one, take in some capital for it. And I think the important part of that as well is no longer have, some fairly sizable costs that go along with, keeping it in good standing, and let alone doing any of the work that brings it forward. So for us, being able to maintain some ownership of that project is key, because again, as I sort of highlighted in that presentation, there's a lot of very good things happening in that district with Perpetua, the neighbor, with antimony prices running higher, with no more Chinese exports and no U.S. production of antimony currently. So we think that is again another piece that gives us further optionality and different ways to monetize going forward. That just help us, create value for the Stallion company, and again, be able to help us do the work that we want to do in the Athabasca Basin that we think is sort of our ultimate, driver of value for the company.
Okay. And last question here, what's your cash balance and what can we look forward to next year? Do you have a budget yet for that program?
Yeah, we're working on the 2025 programs as we speak. We've got a cash balance of just a little over $2.1 million at the moment. So, still have a healthy treasury, which is leaving us in a good position. But again, wanting to be able to get out and drill Appaloosa with a follow-up program is, first and foremost on our minds. So, finalizing things in the next few weeks for the 2025 budget, but again, sitting in a good position now, but really excited about the work that we can have in 2025 that'll take us through that year. And again, for us, it's all about being a key explorer that people want to look at as we start to see this uranium market build again. And, we've seen it build in the producers and developers again. And once that level of enthusiasm comes to the juniors, we think Stallion is one of the top names, if not the top name, that you want to be looking at for exploration potential in the Athabasca Basin. So an exciting time for us, and really looking forward to both the end of this year and 2025 as we move forward.
Great. Okay. Drew Zimmerman, Stallion Uranium, thank you for joining us today.
Yeah, great to be on with you, Dave. Always appreciate it.
Sounds good. So thank you everybody else for tuning in. Reminder that Red Cloud Securities will be back next week when Alina sits down with Electric Royalties. That's November 11th at 2 p.m. Eastern. So have a great day, and thank you for supporting Red Cloud's webinar series.